Hi, Dave Zegel here. Today let's talk about how you can save a ton in taxes if you are running a successful service business. Now, by service business, we're talking about any business that does not produce a thing. So if you're thinking about a consultant, lawyer, dentist, doctor, personal trainer, accountant, those are all considered qualified service businesses by the IRS. And those types of businesses have special tax considerations. Under the new tax law, there is a qualified business income deduction that is now in effect, really for any business. But the challenge for service businesses is that once you start making a certain amount of money, that deduction starts to get phased out. That is where you can be losing a lot of money and sending a lot to the IRS that you really don't need to if we can look at some proper planning for your business. Specifically for this rule, what happens is once your combined income as a married couple starts to get over about $320,000, this qualified business income deduction starts to phase out, and that's a big deal. What happens is that from around $320,000 up to about $420,000, that deduction gets phased out and then it's completely gone once you get up around $421,000, at least as of 2019. Those numbers will continue to rise with inflation. But right now, that's the range we're looking at, around $320,000 to $420,000 of income. What happens is the difference between making $420,000 of income on your tax return and $320,000 of income on your tax return, the net difference as far as how much tax you're going to pay between federal and state usually winds up around $50,000. And that's going to depend on what state you're in. But if you look at that $100,000 of income that you've made, about $50,000 of it will go to either the IRS and or the state. That's a pretty big chunk of change to be given up based on your hard-earned income. So how can we get that down? How can we get it to that $320,000 threshold or below? There are two main things that we can do. One is that we can intentionally make an investment in the business. So if you need a certain piece of equipment, or if now is the time to hire somebody, any investment that you can think that would make a significant difference in your business, now would be a good time to do so to help bring your income down. Also, you could use a retirement plan, and this is really the number one thing that we see a lot of small business owners use, is a retirement plan where they can put a ton of money into a 401k and a profit sharing for themselves and get the tax write-off. So it's money that stays in your pocket. It might be a different pocket, but it's money that stays in your pocket, and you get the tax write-off now to bring your income down below the threshold so you get the qualified business income deduction. Now, most commonly, when we're trying to get from around $420,000 down to around $320,000, it's going to be some combination of the retirement plan and making an investment in the business. And once you point out the difference in taxes paid, I mean, think about it. If you're going to spend if you make $100,000, you're going to spend $50,000 in taxes. It's certainly worth it to go ahead and make the investment in the business or in your own retirement account instead and save the tax dollars. Effectively, half of what you're putting into either the investment or in the business or your retirement plan is going to be a tax savings paid by the government for now. You'll be taxed later when you take out the money in retirement, but still, that's a huge chunk of change to be putting back in your pocket and investing back into your business. So those are the two main ways to really get your income down below the threshold and save a ton on taxes just by proper planning year after year, and not only planning for this year, but looking out for many years into the future. If you have any questions on the qualified business income deduction or those thresholds we talked about and how it applies to your business, give me a call or shoot me an email. I'd be happy to help.